markets are closed, but the business stories are just heating up. Hello, I'm Mai Rodriguez. Catch up with us on Business Brief. Asian shares mixed or trade mixed on Wednesday as U.S. and China wrap up their latest round of talks without a deal. China's top trade official says both sides agreed to work towards extending the August 12 deadline for higher tariffs following 2 days of talks in Stockholm, Sweden. But the U.S. side says an extension is discussed, not decided. A mixed picture dominates the Asian equity markets, with South Korea's Kospi rising the most at nearly 1%. Hong Kong's Hang Seng, meanwhile, falling the most at 0.5%. In the currency markets, the US dollar depreciates against the Japanese yen, the Singapore dollar, and the South Korean won, but the greenback appreciates against the Thai baht. The US dollar is flat against the Hong Kong dollar, and the Australian dollar is also flat against the greenback. In commodities, gold prices are up by nearly 0.1%, while oil markets also up. In the cryptocurrency space, Bitcoin rises by 0.4%, while Ethereum is up by over 1%. The International Monetary Fund, or IMF, raises its growth outlook for the Philippines in 2026, but keeps its forecast for this year unchanged. In its latest World Economic Outlook, the IMF expects the Philippine economy to grow by 5.9% next year, slightly up from its earlier forecast of 5.8%, but still below the government's 6 to 7% target. For 2025, the IMF maintains its 5.5% growth projection, matching its April estimate and landing at the low end of the government's 5.5 to 6.5% range. This comes amid ongoing global uncertainty. Filipino-American leaders are calling for transparency and due process after a spike in deportations of Filipino cruise ship workers in the U.S. BNC's U.S. correspondent Don Tagala reports from New York.
The National Federation of Filipino-American Associations, or NAFA, is calling on the Philippine Embassy in Washington, D.C., as well as the Trump administration, to further clarify and provide transparency on the reasons behind the increased number of Filipino seafarer deportation in the recent months. At least 22 Filipino cruise ship workers aboard the Carnival Sunshine were detained and deported when Carnival cruise ship docked in Norfolk, Virginia port in the past 4 months. NAFA National President Ryan Amata says their goal is to ensure the rights of Filipino workers are upheld and respected. In a statement, NAFA Virginia State President Angela Reyes said that NAFA will continue to advocate for due process and humane treatment for all individuals. Meanwhile, the Filipino Workers Center, who has been following closely the said case, is asking the Customs and Border Protection, or CBP, to make these detentions and deportations make sense, as it's still not clear to them why these Filipino seafarers, whom they described as falsely accused of possession of child pornography, were detained and deported despite a lack of criminal charges or convictions.
They were not, given access to, to an attorney. It's not required, but these are serious charges, and and they should have at least some form of evidence for them to revoke the visas of these workers, and make an order of having them removed or returned to the Philippines.
We really want the Philippine government to take action on this. It is so apparent when you read all of when you hear all of the testimony, all of these housekeepers, all of these, chefs and galley attendants. Is child pornography really a rampant problem? They don't deserve this type of treatment.
Soriano Versosa says after speaking with the Carnival Cruise Line, officials told them that the Carnival Cruise Line is taking this issue as a law enforcement matter, and that Carnival always cooperates with law enforcement investigations.
We beg to differ that there are no charges being filed. There are no convictions that are happening. They are simply getting their immigration status taken away. And so it's very much a immigration issue as well as a civil rights issue.
Meanwhile, in light of the Philippine President's State of the Nation address on Monday, Filipino activists in Washington, D.C. are demanding action from President Ferdinand Marcos Jr., who recently met with U.S. President Donald Trump at the White House.
We're demanding that Marcos take a stand. No, he has basically made no public stance and demand that this crackdown on immigrants stop, that the rights of Filipinos na nakadetain na or nakathreaten na, that they're protected. We are in touch with the families. They are scared, no, but they are fighting. And we're asking Marcos to do the same, to fight.
We say enough is enough, that we protect our migrants, we protect our workers, our seafarers, and we also demand that Marcos and the Philippine government advocate and do everything in their power, use diplomacy to not, back down and really fight for the Filipino people.
These Filipinos on the East Coast say President Marcos may have missed the opportunity to raise the issue of the unexplained surge in seafarer deportations during his meeting with U.S. President Donald Trump.
It was, a lost opportunity. And who else is going to stand up for Filipinos, if not, its own government, to be able to question? We power the cruise line industry. We are 1 in 4 of seafarers that make it work.
However, it's not too late for the president to advocate for the rights of Filipino seafarers to receive due process and for the U.S. to uphold their legal rights to work on these cruise ships and continue to work without fear of unjust revocation of their work visas. Don Tagala, Bilyonaryo News Channel, New York.
Transportation Secretary Vince Dizon, together with Pasig City Mayor Vico Soto, inspect the Ortigas station of the Metro Manila subway, which is under construction. The two officials are joining forces to solve right-of-way issues linked to the station. Dizon is confident construction of the Pasig station will start in a few weeks. President Marcos wants to fast-track the completion of flagship infrastructure projects that can help commuters. And as the Bangko Sentral moves to loosen monetary policy, the fiscal side faces its own trade-offs. The Philippines stands to lose an estimated 3 to 6 billion pesos in annual revenues due to zero tariffs on select U.S. commodities. That's according to Finance Secretary Recto, who cites preliminary estimates. Speaking at the post-SONA briefing, Recto says the potential revenue hit comes from removing duties on imports like automobiles, wheat, pharmaceuticals, and soybeans. He clarifies the trade deal is still under negotiation and not yet final. Even with the U.S. imposing a 19% tariff on Philippine exports, Recto insists the overall agreement remains favorable. Makabayan bloc lawmakers Antonio Tino and Rene Coa file House Bill number 2599, which seeks to establish a 1,200 peso national minimum wage. During the 19th Congress, they passed a bill pushing for a 200 peso minimum wage hike. A counterpart bill at the Senate sought a 100 peso increase, but they failed to reconcile the two measures. Earlier this month, the National Wages and Productivity Commission approved a 50 peso increase for minimum wage earners in Metro Manila. A consumer watchdog is urging President Marcos to terminate PrimeWater's contracts with local water districts, warning that poor service from private water concessionaires could jeopardize basic access in provinces across the country. The group Water for the People Network says PrimeWater, owned by ultra-Bilyonaryo Manny Villar, controls about 75% of local water partnerships nationwide, giving it near monopoly of power outside Metro Manila. The group cites dry taps in La Union and ongoing legal battles in Bacolod as evidence of systemic failure and says the company is using courts to dodge termination clauses. In his SONA, President Marcos ordered a sweeping review of non-performing water deals, signaling to regulators that water security isn't just an infrastructure issue, but a public trust. The Philippine Chamber of Commerce and Industry is calling on the government to move from rhetoric to reform, pushing for action on issues that directly affect businesses. The country's largest business group says President Marcos' SONA failed to lay out a legislative agenda, leaving key sectors without policy direction. PCCI President Enunina Manjo says they were looking for moves to ease regulatory bottlenecks, streamline permitting, and modernize government services, still top pain points for entrepreneurs. Manjo flagged chronic red tape despite the ease of doing business law, overlapping agency mandates, slow digitalization, and the high cost of compliance. Still, the PCCI welcomed the president's shift toward a people and productivity-centered agenda, but stressed that delivery and not direction will define impact. We're taking a short break. More business stories are up next. You're watching Business Brief. Blackouts, broken contracts, and botched promises. Energy officials are once again raising red flags over Sikihor, the power provider at the center of Sikihor's energy crisis and a key point in the president's SONA. Sujin Kim reports from San Juan City. Go ahead, Sujin.
Yes, Mai Energy Secretary Sharon Garin once again stressed that despite contractual obligations to deliver 8 to 9 megawatts, Sikihor Island Power Corporation or SIPCOR supplied only 5 to 6 megawatts, plunging the island into 5-hour blackouts, devastating local businesses, tourism, and schools, even saying that the current situation is back to when PBBM first visited, even worse. And even more alarming, SIPCOR lacks N1 redundancy, meaning no contingency generator during maintenance, forcing critical equipment to run 24/7 without rest. The consequences, machine failure, unstable supply, and a community held hostage by darkness. NEA Administrator Antonio Almeida said they've given them enough chances and now it's time to step in. A third-party evaluation by UP engineers has been commissioned by NEA, and if SIPCOR fails that test, the government will intervene. But Sikihor is only the beginning. Camotes, Palawan, Marinduque, Catanduanes, Masbate, and Tawi-Tawi. These islands are on deck for technical audits, with many suffering the same fate. Decrepit generators, lax compliance, and a lack of investment. The solution, a national push for microgrid investors. Garin is calling on the private sector to invest in full suite microgrids, including solar with battery, diesel backup, and local distribution. But a more powerful policy shift is coming. No more perpetual operating certificates and no more uninspected plants. The Department of Energy is drafting reforms to require regular inspections, shorter validity of generation permits, and NTC oversight even in privatized island grids. And then there's the national target. By 2028, the government aims to electrify every sitio in the country. But it's a moving target, they say, and as of now, roughly 1 million households remain without access. Almeida said NEA will receive 5 to 6 billion in 2026 for electrification, up from just 2 billion pesos this year. Funds from the privatization of hydropower are also being earmarked to help bridge the gap. But the challenge remains massive. The energy family says 18 billion pesos a year is needed to meet the goal. And those are latest updates from San Juan City. Back to you, Mai.
Thank you for that report, Sujin Kim. Security Bank has lowered its full-year growth forecast for the Philippine economy from 5.9% to 5.6% due to higher tariffs global trade uncertainty and geopolitical risks. Speaking to BNC's Business 360, Security Bank Chief Economist Angelo Taninco said this move comes as the 19% tariff rate imposed by the U.S. kicks in by the second half of the year, slightly slowing domestic momentum. Despite this, Taninco expects the peso to hold steady around 57 to the dollar, supported by weakness in the greenback. A BSP rate cut is also still on the table this year, but he notes it may have to wait until after the U.S. Federal Reserve makes a move.
We think that there is a need for the Fed to cut first before the local central bank can proceed with a third for the year in order to preserve the interest rates differential, which currently stands at 75 basis points, or a historic low.
GMA Network's net income surged to 2 billion pesos in the first half of 2025. In a disclosure, the media giant, led by Bilyonaryo Gilberto Duavit Jr., said this is more than 3 times higher than the same period last year. The boost came from election-related ads and strong digital growth. The trade and economic teams of China and the U.S. had constructive exchanges over important topics of mutual interest in Stockholm on Tuesday. That's according to China's international trade representative. He added that Beijing and Washington will continue to promote the stable and healthy development of bilateral economic and trade relations. The two sides will also seek an extension on the pause on the 24% reciprocal tariffs of the U.S. side, as well as countermeasures imposed by the Chinese side. Energy or emergency workers try to clear the rubble at the site of a damaged kindergarten in Russia on Wednesday. A magnitude 8.8 earthquake struck off Russia's far eastern Kamchatka Peninsula. A local official says no children were in the school at the time of the quake. Many buildings were damaged and several people were injured. Here in Manila, state seismologists issued a tsunami warning for residents in coastal areas facing the Pacific Ocean. And in Japan, tsunami warning sirens rang out over Hokkaido. Japan's weather agency expects tsunami waves of up to 3 meters. Residents have been advised to seek higher ground. Philippine shares fall for 5 straight trading days. The PSE index ended lower by 0.1% to close at 63.18, finishing the day as the 7th worst performer in Asia. Majority of the sectoral indices ended in the red, with financials falling the most at nearly 0.6%. Decliners outpaced advancers at 95 to 87. Total value turnover reached 4.7 billion pesos. The day's most active stocks ended mixed, with Ayala Land rising the most at more than 2%. Ayala Corporation, on the other hand, falling the most at more than 1%. Meanwhile, at the foreign exchange market, the peso is currently trading at 57.21 against the greenback, appreciating from the previous close of 57.31. And that's a wrap for today's Business Brief. I'm Mai Rodriguez. Join us again tomorrow as we bring you the stories that help you plan your next big, bold moves in business. Only here on the Bilyonaryo News Channel. See you then.